First, let's start with Netflix. As I understand it, you actually own some Netflix. You like the company. So give us your sense about where Netflix is and where it's going.
So, David, I think the big issue for Netflix is that they won round one of the streaming wars. And that has forced every major media company into the marketplace. And as I think investors know well, Disney and Apple, HBO have come in with really strong offerings, and Hulu and others are coming up as well. And so, from Netflix's point of view, they've gone from having the space to themselves to having to compete against people who have real libraries, real content, and are generally speaking very well financed. And to me, the sense early this summer, over the last couple months, that quarantine was coming to an end and that the pandemic was over meant people were going to watch a lot less TV than they were watching when they were quarantined at home. So it's not surprising that this quarter showed a lot lower growth in new subscribers, but I'm afraid that the pandemic isn't over and that Netflix is still the strongest player in that marketplace. So I do expect the company to rebound from this. And I think the future is still bright, albeit with a lot more competition than it had in the past.
Yeah, Roger, I must say, it certainly is the strongest in this space. The question is, can it maintain that or not? Because as you say, a lot of people have come in. Warren Buffett likes to talk about a moat around the business. Does it have a moat around the business, or is that moat just spending money hand over fist in new content? Can it keep that up?
Well, to be clear, that strategy has worked unbelievably well, and I don't know why it would stop. I think they have really large advantages there, relative to Disney in particular. And actually, I think this is true of HBO as well. Netflix really does have a new programming advantage. And I think they understand their audience better, and they just have a lot more experience doing this. Now, at the same time, I think there are other markets in which they can expand. They're testing things around games. I think that, conceptually, you could imagine them eventually getting into other forms of streaming, podcasting or music or whatever. And I don't think that they're locked into anything narrow. I think the brand is really good. I think that the team there has just demonstrated time and again that they have a much clearer understanding of what the audience needs than anyone else does. And I think that's still true. At the same time, we have to be cognizant of the fact that not everybody is going to wind up with an infinite number of streaming subscriptions. So Netflix is going to have slower growth eventually, but I think it's going to remain an extraordinarily high profit margin business. And I think its position in the marketplace will remain solid even with all the competition that's out there.
Roger, you raised the issue. You mentioned gaming, for example. Does Netflix have to have, well, I'll call a second arrow in its quiver? I mean, certainly, you talk about Disney, whatever you think about strength or otherwise, they've got several lines of business that can really cross-subsidize and really support them through lean times. Does Netflix have to go the way, perhaps, of Uber, when they said, let's be Uber Eats, not just Uber?
Well, to be clear, I think Uber is a terrible business. And each time they're expanding, they're looking for a market that is going to have legs for a long period of time. I think Uber is, frankly, the triumph of unlimited capital over a terrible business idea. The situation at Netflix couldn't be more different. It's a very substantial business. And I think the question is less, do they need the arrow in the quiver? Rather, are there arrows that they could put in their quiver if they want? And I think the answer to that's an emphatic yes. At the same time, again, I think investors need to be changing their expectations for these large tech companies. I don't think the kind of growth rates we've seen in recent years are going to be sustainable. And this isn't just about streaming. I think that's going to be true everywhere.
Roger, we also have a government in Washington. It's paying a fair amount of attention to big tech companies, including places like Google and Facebook and Amazon. What kind of risk or even opportunities could that pose? And let me raise one possibility with you when it comes to Netflix. We have this executive order out that's really from the president saying he doesn't like mergers very much these days. Could that benefit Netflix? Because as the largest player, it may make it more difficult for some of the other players to get together to challenge it.
So, David, I think that the situation with the government is really different today than it was even 6 months ago. So the Biden administration brought a professor from Columbia named Tim Wu into the Council of Economic Advisors. It then appointed Lena Khan, a tech reformer, to be the head of the Federal Trade Commission. And yesterday it announced it was going to appoint Jonathan Cantor to be the head of the Antitrust Division of the Justice Department. These are three extraordinary people, all serious tech reformers. And I think what investors need to understand is that antitrust is the most pro-growth form of government intervention on earth. Historically, it's been fantastic for investors. It does require changing your investment strategy, but what winds up happening afterwards is the target companies tend to grow more slowly, but they still grow, and then you get whole new industries that come out. The history of that in technology has been 100% of the time. Antitrust has led to a new industry and great new wealth opportunities for investors. So we should be embracing it, not fighting it. The problem in tech, and this is really a huge issue for the internet platforms, but I think it's much broader than that. It affects artificial intelligence, it affects facial recognition, a lot of the new technologies we see out there, that there are serious consumer safety issues. And I think the industry is today where the chemicals industry was in the 50s, where the garment industry was when it depended on child labor, where the food and drug industries were before the creation of the FDA, when food and pharmaceuticals were unsafe, where the railroad industry was before the regulation of that industry. So I think it's the right time that this industry has undermined public health by amplifying disinformation about the pandemic. It has undermined democracy by being platforms for the creation of things like QAnon and also the insurrection. And these are really serious issues. And I think the thing that investors need to do is to recognize that there are at least three tangents that the Biden administration can do without any kind of new legislation. There is an antitrust case that the Attorney General of Texas has created against Google and Facebook for price fixing in the advertising market. That is a really serious issue. And if the federal government takes on that case, they can pursue it as a felony. And price fixing is the worst economic crime you can commit. And so the standard remedy is 3+ years in prison for each count. And if I read the Texas case properly, there are 2 counts there affecting the executives at Google and Facebook. That's a huge deal. And investors haven't focused on that at all.